Hello and welcome to CMS Forex News. I'm your market analyst Nick Nasad. Today is Friday, December 19, 2008. Overnight, the Bank of Japan cut its key interest rate to 0.1% from 0.3%. It also laid out a plan to boost liquidity in the financial and corporate debt markets by buying corporate debt and expanding its purchases of government debt. It does so after laying out the dangers affecting the Japanese economy, which includes a warning about a deepening recession. The cut is aimed to stimulate the economy and to help ease the appreciation of the yen, which has recently jumped to a 13-year high against the dollar. Such a strong exchange rate makes Japanese goods more expensive abroad, cutting into export growth. The Japanese government, meanwhile, approved an emergency stimulus package worth 43 trillion yen, or $489 billion, to improve a worsening employment situation and ease financing worries in the corporate sector. The yen gained overnight against its main rivals, with the pound-yen pair continuing its decline this week after hitting and bouncing down off resistance at the 139 level on Wednesday. The pair is 600 pips lower than that intra-week high and breached an important support level at 134 in today's session. It then retested that level as resistance before heading down to 132.60. The euro-yen, meanwhile, slid almost 400 pips as it continues its correction from the recent rapid upswing we saw earlier in the week. The pair hit a high of 131 yesterday in European trading before the ECB announced the cut to its discount rate, which led to a spurt of euro selling. Turning to European fundamental news, German producer prices fell by more than anticipated in November, declining 1.5% on the month. That drop was the most since records began in 1949. The annual rate cooled to 5.3% from 7.8% in October. Such a big reduction in producer prices eases pressure on companies' profit margins and gives the ECB leeway to cut rates by another 50 basis points in January's meeting. The euro-dollar pair, similar to the euro-yen, continued its decline after hitting a peak near 1.4720 in Thursday's session. The huge gains for the euro following the Fed's announcement on Tuesday were judged to be unsustainable, and the pair has broken below 1.40 again in a strong 400-pip move that reached 1.3840 to end the week. The dollar-yen pair fell overnight, but recovered its losses in New York trading. There were two big pieces of news out of the U.S. as the Bush administration said it would extend an initial $13.4 billion in loans to GM and Chrysler, with an additional $4 billion likely in February in order to bail out the ailing auto industry. Coinciding with this announcement, Treasury Secretary Paulson urged Congress to release the second half of the $700 billion set aside for the financial sector bailout after the government exhausted the first $350 billion in the first 3 months of the TARP program. The dollar-yen pair was trading about 250 pips higher than its 13-year low set on Wednesday. The dollar gained also against the Swiss franc in a one-sided 330-pip move, which paired some of its losses seen earlier in the week. In Canada, consumer prices fell 0.2% in November and slowed to 2% in annual terms. Last month, prices plunged 1%, so economists expected bigger falls than today's report provided. The slowdown is attributed mainly to falling gasoline prices and offset any increases in food and shelter items. The US dollar-Canadian dollar pair rose for a second straight day, breaking above a downward sloping line of resistance at 1.21. The pair surged 330 pips from its global open to test 1.24 as the loonie remains pressured by falling oil prices, which are below $35 a barrel in today's trading. The Aussie and Kiwi were also pressured for a second session. Next week should feature low liquidity, which can mean quiet market conditions or that a relatively few amount of players can push action in volatile trading. Some key releases next week include new and existing home sales from the US, along with durable goods orders. That should help gauge how the U.S. housing and manufacturing sectors were faring in the middle of the fourth quarter. Also on tap will be the end-of-the-month releases from Japan, including retail sales, household spending, employment, and inflation data for consumers and companies. And that wraps up this week in the Forex markets. Thank you for joining us here at CMSFX.com, and have a great weekend.